Well, we've seen some very, very strong numbers from DLF in the fourth quarter. The company's bookings, collections and cash generation all are at record highs. The company's net debt is almost zero in the residential business, and the guidance for the current year, FY24, booking guidance is around 11,000 to 12,000 crores. Ashok Tyagi, whole-time director at DLF, is with us. Mr. Tyagi, good morning. Thank you so much for joining in. And
morning.
Sorry we had to keep you, on hold for a bit. We were just completing that conversation with Naren. First question, sir. I think the biggest headline that we've heard around DLF in the last 1 quarter is the 7 crore apartments that you were selling, or each apartment worth 7 crores that you were selling in Arbour, right? If that's the shape of things, then why conservative with the guidance? You did bookings of 15,000 crores in FY23. You're guiding for 11,000 to 20,000 crores in the current year. Some brokers say you're being too conservative. Why so?
Okay. So, obviously, as a matter of principle, it's better to under-guide and over-deliver than vice versa. That's been our philosophy. But that apart, we honestly were not expecting that the entire stock of Arbour of 8,000 crores will actually get sold out in Q4, actually in a matter of a few days. In fact, we upped the threshold for revenue recognition by saying that we'll only report this pre-sales if they actually collect the entire 10% of the initial payment plan and they all sign their agreement to sell, which normally takes 4 to 6 months, but actually within a month, the sales teams were able to conclude that. Such was the, if I may say so, the hotness about that product. So, our original plan was that we will do about half of Arbour in Q4 and hopefully half in Q1. And so our base plan for 22-23 was more like 10,000-11,000 crores. It became 15,000 because of this, the Arbour, almost I'd say, preponement of sales. I don't like that word though. And really, so what we believe is that our base sales plan is moving from 10-11 to about 12 in the next year. Again, if in Q4 there's a strong happening like Arbour, one can't say. But we feel pretty confident about the guidance of in the 11 to 12 range, hopefully. And hopefully like this year and the year before this, we should hopefully be able to beat it. But right now, let's stick to that number.
Mr. Tyagi, hi, good morning. Prashant here. But there was that capital gains tax thing also, right? Which would not have been available after the 31st of March. Maybe some of it
yeah, so I mean, Prashant, this was a 7.5 crore product. So really, but again, I mean, if that played a role or not played a role, difficult to say, frankly. I mean, one would really test it out only when we launch the next product in that category. I mean, the data points are obviously lesser, but the sale of our super luxury Camellias, even post April, it continues to be on a strong footing, in that sense.
How many
units
are
to be having that?
In Camellia, what is the status now? How many have you sold? How many are left?
So I think of the 429 units, my assessment is I think we have about 40 units left now. I think about 90% have been sold out.
429 total and 40 are left, you're saying?
Yeah.
I've been hearing anecdotally that even in a market like Noida, there is a builder who's going to launch a project priced at, hold your breath, some 18,000 rupees a square foot.
Yes.
What's going on? I mean, it is... Go on.
So, Prashant, actually, Noida is again a great market. It's been underserved of late because a lot of the traditional Noida developers, unfortunately, have gone into their own, tough stories. So actually, there's like a dearth of quality suppliers in Noida, if you will. But Noida has the pockets to afford a 18,000 rupees product for sure in selected sectors. And there are some sectors in Noida which are very attractive for sure.
Okay. Mr. Tyagi, right? Prashant was asking you about Camellia. There are only 40 flats left because he's showing his personal interest in that. Prashant?
Yeah.
Just at a reasonable price of 2 crores.
Sorry, what is that?
At a reasonable price of 2 crores, the Camellia flat.
Yeah.
So.
2 crores?
Isn't it? Is that...
I would send a check across right away if it is 2 crores.
No, but Mr. Tyagi...
You wish is what he said.
Mr. Tyagi,
sorry, I just had one question on that, because... I mean, you were telling Surbhi also about how the property market has sort of ballooned in a big way. The interactions that we've had with a number of real estate guys in the past couple of days indicates that everyone's eye is now in the Mumbai market. And I don't know whether there's any more space to build, but definitely people are coming through. Prestige was the earlier one that told us that, they're going big in the Mumbai market. You've shown some interest in Chennai as well, but does Mumbai interest you, and in the near future, any plans over there?
Okay, so Chennai, obviously, we have shown interest, you're right. In fact, we should hopefully be launching a luxury product in Chennai in the next 12 months, depending on the approvals and everything. And that, from a Chennai standpoint, I think that should be a truly marquee development. Mumbai is the fact is, Mumbai is the country's largest real estate market. We had one project in Mumbai, which we had taken about 15 years back with 2 other partners. Unfortunately, that's run into rough weather for a variety of reasons. But we continue to be sort of, looking around to see if there is a project in Mumbai where we can sort of tip our toes, Hopefully, we should be closing out something soon. And but again, that will be a small start, really, in that sense. We want to first sort of understand how the Mumbai markets and all work, And we don't anticipate becoming very big in Mumbai. We have but obviously Mumbai is a major market, and I think it is of some interest to us. And I think we do want to sort of, assess and see if there's a small project that we can enter with.
So just to clarify, I have to clarify because our producer just told me that, sir, 2 check mere bhi le lijiye. What Sonia said, I have to. Sonia said, the reason I said this, Sonia said 2 crores. Mr. Tyagi, the ticket size is 20 crores, right? Or more?
No, it's 35 crores. The flats start at 35 crores, right? If I'm not wrong.
The ticket size is now actually north of 40. So 2%, 2 crores will be a nice initial 5% check. That's fine.
I see. So, so that's called, Sonia, the reason I said 2 is because, you get that's value, what do you call it? Value investing.
Initial check. That's the initial check.
Are you talking about the initial check?
I think I can at least look at community investing for this 40 crore. We'll do it.
Yes.
We'll do a pooled, crowdsourced, do a pooled investment vehicle.
Yes.
But, and Mr. Tyagi, you spoke about Mumbai. I remember I used to report on real estate back then. It was a Mumbai textile mill. It was a marquee deal of its time, the highest value deal. I remember that, very close to our old office. But anyway, to come back to, the key takeaway from all that we're discussing, what is the new definition of premium now? 7 crore, 10 crore, how are you defining premium? Okay. And how much of your sales this year will come from the premium category? Is this the direction that the market is now taking? And then should we expect better margins then in that case as well?
Okay, so we have made it pretty clear that we are not in what is loosely called the affordable segment, which is, the sub 50 or the sub 75 lakh segment. I think we have immense respect for the people who are there, but we at least don't believe that we can make adequate money on that. So our ticket sizes typically, even in New Gurgaon, begin at a 1.5 to 2 crore level, which is broadly our ticket sizing. And from there it moves right up to Camellias, which is 40. If you look at our guidance and our presentation for the previous quarter, we do. I think we will begin with projects in the 3 to 4 crores range, and then hopefully have projects which are in the double-digit range. We have no plans right now of getting a Camellia sequel fully, but I think we should have one more project coming up on the Golf Course Road sometime in this fiscal, which should again be a very, very, very marquee investment, and a very marquee property. So I think our bias, Surabhi, will continue to be on the premium and luxury and the super luxury segments versus the sub-premium segments. That's what we believe our land parcels lend themselves to more naturally.
So just as a percentage of sales, how much will come from premium and how much will come from super luxury in 24?
So in 24, the super luxury proportion would drop because all we have left in the definition of super luxury is about 40 odd apartments in Camellias. So so I think even if a substantial number of them sell, it will still be a small proportion of our total pre-sales guidance that we are giving you. So the pre-sales guidance will be in the luxury, premium, and the between premium and luxury segments, and most of it would be actually driven by the new launches, be it the residual tower that we have in One Midtown in Delhi, or the new development that we are planning in Gurgaon, or some of the newer floor developments, etc., that we are planning in other geographies, including the one that I mentioned to you about Chennai.
I just have one final question, and this is, a common narrative which is picking up now, because houses have become so unaffordable in the metros, especially for the common man, right? people are now preferring, especially the younger generation, is now preferring to rent rather than buy a house. And that's the increasing chatter that how perhaps a rental home is better for you as an investment option than buying outright. In that context, you do rental, you have a rental portfolio, both office as well as retail. Tell us a little bit about the income there. What kind of growth are you looking at, and could it be outsized?
Okay, I don't know about the outsized piece, but pure numbers basis, I think our total rental numbers this year were just north of 4,000 crores, approximately 4,000 crores. And we anticipate, Sonia, that by March 24, we should exit with a run rate in the range of 4,800 crores plus, So I think from a run rate standpoint, about a 15 to 16% growth in run rate should happen this year. Predominantly driven by obviously the usual suspect, which is the annual escalations that come, the mark-to-markets, and a couple of new properties, one in Gurgaon as well as in Chennai, which should come on stream this year.
So this is for commercial rental, right? Commercial rental is what you're talking about, 4,800 crores.
This includes commercial and retail. The retail component of this is about 800 crores this year. On the retail piece, I think we are pretty much running to capacity on the existing malls that we have. We are in the pre-design phase of what we call the Mall of India, Gurgaon, which would be a bigger mall. It would be like a destination mall, which I think, if all goes well, hopefully in a year from now, that should hit the construction stage. So we do believe that in the next 4 to 5 years, our retail volume should double. Just to give you a perspective, the retail is about 11 or 12% of our total square footage area and contributes about 18% of our total rentals, And I think, so retail does tend to, perform better on a per square foot basis. And
Mr.
hopefully,
Tyagi,
this additional investment in retail.
Mr. Tyagi, just can you leave us with a number if possible? Rental income was just below 4,000 crores in FY23. Can you give us a range for 24? Total rental income?
So I think the total range should be about 4,600 and the exit run rate should be about 4,800.
Okay, all right. Thanks a lot for joining in, Mr. Tyagi. Always great speaking with you to understand not just about your own business, but about how unaffordable the real estate market has become for the common man. But jokes apart, it's good to see that the boom is back after a long period of lull.
Thank you, ma'am. Thank you.
All right.